You're listening to Season 2 of Beyond Insights, your go-to podcast for all things accounting, business, and technology.
Unsure how to improve your leadership skills, or whether you're suited to being a leader to begin with? Looking for ways to build a stronger team or take better risks? Then stay tuned.
From cybersecurity, blockchain, and AI innovations to sustainability, employee retention, and work-life balance, we've got you covered.
We speak to knowledgeable and insightful guests from varied backgrounds, industries, and locations from all around the globe.
From this multiplicity of thought, we strive to find solutions to our most urgent business problems.
Whether you're a small business owner, an accountant, entrepreneur, or even a young professional looking to progress, this podcast is for you.
Thank you for tuning in. Let's dive right in and go beyond insights.
Hi everyone, today we are speaking to Tony King, who's the Senior Vice President of Pricing, Packaging and Commercialization Strategy at Xero. Prior to joining Xero, Tony led the pricing and packaging strategies at several other organizations, including OneTrust, Nextiva and ServiceNow. So thanks so much for joining us, Tony.
Absolutely. Thrilled to be here. It's been a great season so far. So I've really enjoyed listening to the podcast.
Oh, thank you. Thought maybe since I did a very quick introduction, you could tell us a little bit more about yourself and about your background. How did you end up in pricing and packaging, and what does that journey look like?
Yeah, absolutely. I'll go ahead and start. So I actually started my career in what's called the Peace Corps. It's a volunteer service through the U.S. government. Started off in a small West African country called Benin. So I lived in a village of 60 people in Benin, working at a larger town, Alada, that was about 3,000 people, working with small businesses. And I was a small business advisor, so I'd work with small businesses just providing advice on what they can do to differentiate themselves and kind of do some basic accounting, stuff like that. I did it twice. I did it once in West Africa, was there for 6 months, and then for 3 years in Paraguay in South America. And so coming back to the Bay Area in California, where I grew up, had gotten married in Paraguay, knew I wanted to start my career and knew I wanted to work with small businesses. So I actually started at Intuit in the finance department. And I loved a lot about finance. I loved the financial modeling, but I always wanted to get closer to customers. So I would spend kind of an hour every week just listening in on customer calls, just to try and get better understand our customers. A role opened up in marketing, leading a new pricing team. They'd never had somebody doing pricing before. And it felt like a good opportunity as kind of a bridge role into marketing. I've been on this bridge for almost 15 years now. I don't think I'm going to make it to the other side. I've really enjoyed it. And was at Intuit for about 12 years, Sage for a year, and then you mentioned some of the other companies I was at before being thrilled to be here at Xero. So, yeah.
That's such a cool background, really, really interesting story. And I love, starting off working with small businesses and really, Xero is also software for small business, so that trajectory makes sense. Also love that this is the bridge that you have not ever gotten off of.
Yes, absolutely. No, it's been a fun career.
And if anyone is sort of confused about what exactly pricing and packaging entails, what would you say?
Yeah, it's funny. I was driving my daughter to school, and she's 14 years old, and she has gotten to know a little bit about QuickBooks, a little bit about Sage, a little bit about these companies. We talk sometimes. And one day she said, "Hey, I was checking out your website. There's 3 prices. Why is this? Why do you work so hard?" Yeah, so I try and make 3 prices more complicated than it is. But now, I think, on a day to day, so pricing is pretty straightforward. It's the price that you put on different products. Packaging is sometimes a bit confusing. Packaging is like if you look at a good, better, best lineup, like what is, I work very closely with product marketing on what's in good, what's in better, what's in best. And there's a lot that goes into how we construct a lineup, and whether it's good, better, best, or whether it's usage-based pricing, or whether you have add-ons or don't have add-ons. I work very closely with our product and product marketing teams on those type of decisions. Commercialization is more like business models. So it's a lot when we have M&A or we have partnerships, working to figure out, well, how are we going to make money off of this? What are we going to do here? Are we going to combine these two and just sell them separately? Are we going to bundle it in? That's a lot of the commercialization part of my role. So quite a variety of day to day, but I really enjoy getting in.
Yeah, I think it's definitely a lot more complicated than what your daughter was saying of just, oh, there's
Yes,
three different
exactly.
prices. What are you doing all day?
Yeah.
And I think it's also a lot to do with figuring out what customers are actually looking for. I'm sure like what they would consider to be like best or better and finding the right.
100%. Yeah, pricing really is about understanding customers' value. I think many see it as a spreadsheet exercise driven by finance. That's how you end up getting bad pricing, how you end up getting kind of things that don't make sense to our customers, how you end up with multiple increases in a year, how you end up with when it's a spreadsheet exercise. The more you can understand your customers, understand the value that they have in your products, the more um, the better off you are as a pricing leader.
Yeah, absolutely. So following on from that, what are some of the key factors that you will consider when you start designing a pricing model?
Yeah, definitely. Really, first, if I were to go into a new company and starting like, hey, how would you evaluate their pricing? Or you're at a new startup and trying to think about how you do it. The first is just understanding customer value and understanding the differentiation in the value. And is everybody saying they value it at the same price? Or is there a difference? And do you have kind of segments that some are saying one price, some are saying a different price? And then can you start thinking about a good, better, best lineup? Or, often you start with how you charge before what you charge. So do you do usage-based pricing? Is this the right kind of business and industry for that? Do you do a good, better, best? How many add-ons do you have? A lot of that just depends upon the what you're hearing from your customers. So oftentimes I'll start with just some conversations with, as many customers as you can get, but call it 10 to 15 customers
Nice.
before what we do what we call quant research. Quant research is a survey. And with a survey, you're not getting that kind of one-on-one feedback, but you're able to get it to 1,000 customers. And there's certain kind of science that goes into how you ask certain questions in order to get the right insights that you need in order to create an effective lineup.
Oh, it's really interesting. And I suppose returning to the idea of working with smaller businesses, how do you manage when you're thinking about pricing something for smaller businesses to balance something that's affordable with something that will make your business a profit?
Yeah, absolutely. And a lot of it is just ensuring anytime I've worked with small businesses, I've been working with small businesses 15 years and much of it small business accounting software. Um, what I find is a great variety in what customers are willing to pay. So when I do kind of pricing research, I find some customers are willing to pay $100, some are willing to pay you $20 for the exact same thing. And that's why often a good, better, best lineup works well, is because it allows you to capture those at the $20 and ensure you have a package for those that just want to get started, aren't sure. Small businesses, a lot of them have a lot of uncertainty when they start their business. And so you want to have a package for them. Others are willing to pay more. They want to ensure that they get all the bells and whistles. They want to ensure they're doing everything correctly. And so you want to make sure you have a more robust package available for them and priced at a higher price point. So I would say, and then you try and find a middle one that kind of captures a lot of the market that you're looking for at the right price point for them.
Yeah, that makes sense. I think some small businesses are going to be very price sensitive and they might not see the value in having a certain software. Maybe they think that's something that they'll only get when they're bigger, whereas others might come with a different perspective. So I think that's a good way to make sure you are covering all those different types of customers.
Absolutely. Yeah.
And how do you know when a software company's pricing model has become outdated or when it's maybe not so effective anymore?
Yeah. Again, a lot of it comes from conversations with customers. And if you get out and you start talking to customers and outdated, you know, you're selling and customers are buying, so it can't be that bad. But if you're oftentimes your price too low. If no one's looked at pricing ever, oftentimes I'm the first pricing person into an organization, and the founder set a price 15 years ago and they've never adjusted it. And what that often means, and often when you're a startup, you're pricing at a level that, you're trying to capture a bunch of market share. And so often when I come in, and some of the signs are, if you think of a good, better, best lineup, most of your customers are probably going to be on the good in the middle skew. And the reason is loss aversion. And this is why you generally have a 3 SKU lineup is customers often feel more pain from loss than they feel gain from getting something. And so if you, let's say you only had a 2 SKU lineup, a good and a best, those who choose the highest will often feel they're missing out, that they paid too much because they have uncertainty going into buying a product. And so there's this feeling that they paid too much. Those on the bottom end often feel that um, I could have gotten more. And so a good, better, best has always proven to be kind of the most effective. Now, if a whole bunch of customers are on best, that usually means you're priced too low. And there's an opportunity to create another package on top of that, to try and attract customers. Now, the best way to do this, the most customer friendly way to do this is create that new package and live with the fact you'll have a 4 or 5 SKU lineup for a bit. At some point, maybe you deprecate the one on the low end, and you now have another option for customers and can start moving them up the ladder. Um, but oftentimes you don't have that luxury, and then it comes to price increases. And you know, when you find your way below kind of what the market is willing to bear, you don't want to go straight there. It's just too big of a leap. Customers, you may do all your research and your product is priced at $30. The market is telling you the right price is $200. To the customer that's paying $30, that's been paying $30 for a while, they see that as the fairest price. They don't see that $200 as the fairest price. And so it's got to be a fairly gradual transition, or you can just do it on new, grandfather existing customers in. There's different things that you can do to make it more palatable for your existing customers to go up.
Yeah, it makes sense. You've got to kind of balance what people have been used to paying with your new customers and making sure that you are charging an appropriate price according to what other maybe similar businesses are charging. And I really like that idea of people are more worried about what they're missing out on.
Yeah.
I think that's a big one, this idea of you don't want to miss this. I think it works obviously in a lot of marketing as well. So I think that's really useful to remember.
Absolutely.
And if we think about um, maybe some of the psychology
Yeah.
rather behind how you price things, what are some of the pros and cons in terms of usage-based pricing versus flat rate pricing?
Yeah, absolutely. First, I'll start with that, and then I've got some other kind of fun little psychological things in pricing and packaging that can be fun to bring up. Um, you know, Usage-based pricing. Often, the more you can align your price to the value the customers get out of your product, the better off you'll both be. And usage-based pricing often works really well for this, because usually, as a customer is using your product more, they're getting more out of it. So it allows you to price low for those who just have a simple need for your product, and price higher for those who use your product more. The other nice thing is, it scales up. And so you get kind of revenue growth on a year to year basis as your customers grow, as they're using your product more without having to resort to price increases. But it has the downside of not always being very simple. And there's some businesses where there's a usage metric that just makes sense. Everybody, that's the value you get out of it. You think of kind of the most famous example in my space is Snowflake. They have usage-based pricing. They found a meter that makes perfect sense. It aligns with the value that the customers get out of the product, and it scales with value. You think of accounting software, it's a lot harder to come to a usage metric. Do you make number of invoices your usage metric? Well, some customers get a lot of value out of your product and don't do any invoices. Do you make it kind of the bank reconciliation items? Then customers can start to feel they're being nickeled and dime. Every time they do a download from their bank, it's another kind of ching on how much they're paying. And so it very much is a balance of the alignment to the value customers get out of your product, but then also simplicity, ease of use. And I have found with small businesses, often they want the predictability of what they're going to be charged every month. And it's hard to come to a real strong usage metric that aligns with the value customers get out of you. And so for accounting software, I've generally gone a good, better, best. Now, that doesn't mean there's some parts of accounting software that can't be charged as usage-based pricing. A good example is paying employees. That's one where every time you add that you can start with a low price for somebody who has one employee, and then it scales with the number of employees you're paying and goes up. Or if you think of like accounts receivable payments, as you accept payment, it's a fee per transaction that scales as you use and also aligns with the cost that you're paying. So that's how I think of the trade-off. A couple other fun psychological things. First, I would say, I told you about packaging, and that's kind of what you put into kind of in a good, better, best lineup, how you do that. One of the things you want to avoid is what I call disqualifiers. Disqualifiers are things that customers know they're not. And so often as a business, you'll come up with something really cool and you'll think, let me put that in my highest package. And what actually happens is it causes more customers to go down because that cool thing is only for, say, 10% of the population. And they see that in your good, better, best, and they say, that's not me. And so therefore, I'm not going to go to that package. And so as you think about a lineup and kind of what belongs in a lineup, what belongs as an add-on, you want what's in a lineup, things that are have ubiquitous demand, where everybody agrees the better is better than the good. Everybody agrees the best is better than what it was. And it's a question of, are you willing to pay for it? Anything that's more niche, you want to start taking as an add-on rather than embedding into your packages. And I'll leave you with one more kind of fun psychological thing. It's underappreciated how much price has an impact on your brand and who you are as a company. I was at a company where we actually increased price, but made it to every price ended with a 5 and a 0. So if you think of previously, the price was, 8, 16, 29. We would make it 10, 20, 30, which is a higher price. And when we tested, we actually saw an increase in new customers. And so often with and I think it was because the design on the website mattered. We were trying to communicate clarity. We were trying to communicate, we've got simple, beautiful, easy to use software. And when your price is too complex, it won't work. Well, I've worked at other companies where we were on the other side. We were selling to a very sophisticated buyer. We were competing with the company that had that strategy. And so our strategy was to do the opposite. If the pricing research said I should charge $30,000, I charged $29,482 because it looked like it was cost plus pricing. It looked like we had taken all the price out of everything we were doing and made a very specific price for them. And so pricing and brand comes together very often.
That's really interesting. Is matching the appearance of the brand, even if you're saying you want it to come across as a simple brand, simple pricing, and the same way on the converse side with more
100%.
sophisticated, yeah, users. That's really interesting. Oh, very cool. Thank you for sharing that.
Yeah, it's a fun one.
I think something that a lot of people struggle with when it comes to pricing is knowing when to raise your prices, how to raise your prices, and of course, you want to raise your prices in a way so that you're not losing customers. We
Yeah.
touched on this a bit earlier when you said how you might keep some of your older customers on the sort of legacy pricing plan. But what would you recommend that businesses do when they think about raising their prices?
Yeah, first, I think come to a kind of multi-year strategy. You don't want to be that company that hasn't raised prices in 15 years, does a sudden, very dramatic price increase, and then doesn't do one again for several years. It creates a lot of fits and starts, and it also makes it hard on your revenue model. All of a sudden, one year you look like you just grew dramatically, and the next year it looks like your growth has stalled. And so I would say put together kind of a multi-year strategy rather than just a one-off. So do I recognize that I'm far below the price that I'm charging? And then how do I get there incrementally over time? And then I would also say that like, don't be scared of it. Um, Often you are delivering more value to your customers. You've made improvements to your product. And I find businesses are often quite scared their first price increase. And so first, make sure you're understanding your customer. Make sure you're doing it in a way that aligns with your values as a company and the principles and what you've set out to do. And then also do it in a way that reflects you and your brand. And go ahead and be confident in it. You've delivered value, and be confident in that, but also be principled and understanding and transparent. A lot of times companies are scared of their increase and they do things that are not all that transparent. They'll try and hide something, or they'll try and do something, or they'll try and get very defensive about it. Just be plain spoken, clear, and set it up. And then as you think of the financial modeling, make sure you're going out a couple of years. Every price increase makes sense in the short term. I've never seen a price increase, even some that are really, really poorly thought through, where it didn't create a pretty significant revenue bump the year you do it. However, many of them end up not making sense when you look beyond year one. And so make sure that your revenue modeling accounts for, because as you churn customers or as you acquire less customers, that takes a longer time for that to kind of make a real impact on your financial numbers. And so make sure you're looking at multiple years.
Oh, I think really good advice. Always make sure you're planning a bit further into the future. And then I thought maybe we can look at some of the things that you've experienced, some of the things that have maybe surprised you about pricing over the years. What's one pricing change that's really surprised you in terms of the impact that it had?
Yeah, I think often I want to make sure don't get into too many specifics here. But I was at a company previously where another company had entered into the market, and we had a dominant position, and everybody was trying to lower price to compete with this new company entering in. And I find that often is the first response to a new competitor is let's lower price and compete with them. I'd done enough pricing research to understand that price wasn't the top factor on customers' minds. They wanted a good product. They wanted to be with a brand they trusted. And so instead, we did the opposite. When this competitor was coming in lower than us, rather than lower to compete with them, we actually increased price. And we took the benefits from that increased price and threw it all into making our product better and increasing our spending on brand. And we saw a really large increase in our customers when we did that. all at now a higher ARPU, because we were able to take that price increase and throw it into product investments. That was probably the one that, you know, yeah, my math and my models all said this would work, but I was still, it was a big swing for the company, and so that was one that uh, ended up probably doing better than we expected.
Yeah, I think that's really interesting because lots of people have this assumption, like you were saying, that we need to compete with the competitor in terms of price, that people are always very price sensitive. But actually, there are lots of different levels that you're competing on. And I think sometimes also if you've priced yourself higher, the implication is that your value is greater then, right? Why
Yeah,
would you be costing so much if you didn't have a great product?
absolutely. Yeah, 100%.
Maybe quite a big question. So it doesn't
Yeah.
have to necessarily be the biggest thing, but the question was, what do you think is the biggest pricing lesson that you've learned in your career? But it can also just be, yeah, the great lesson that you've learned that you think other people should know about.
Yeah, my big thing is kind of my pricing mantra is find what makes you unique and charge for it. It's a pricing thing, but it's beyond pricing. Um, often, you know, I hate being at companies where it's just a commoditized and race to the bottom and price is all anybody cares about. And even when I enter companies and everybody says that's the case, I find no, there is something that's different. Our brand is different and how we go to market is different, even if the product is exactly the same. And if the product is still the same, find things that make you different. And so, and then charge for that. But I think the most important thing is like, and this is why I spend a lot of time when I go into a company trying to find out what makes us different. Why are we different than the competitors? Why are we different than using pen and paper or using Excel? What differentiates us? And how much do customers value that? And then aligning our pricing model to that. And so I would say that's kind of been my mantra throughout my pricing career. Find what makes you unique and charge for it.
Yeah, I think that's a really good mantra to have.
Yeah,
I have some rapid fire questions to end off our episode.
absolutely.
So first one is, what's one piece of software, excluding Swift and Xero, that you can't live without?
Yes. It's got to be Excel. Yeah, it's always used by pricing professionals. Love the versatility, love the ability to do the financial modeling.
Yeah, there is still so much you can do with Excel.
Yes, yes.
What's the best book that you've read recently?
There's one. It's not so recent, but I think it'd be good for you, whoever's interested in pricing and packaging. It's called Monetizing Innovation, and the subtitle is designing the product around the price. So often you create the product and then you throw it over to the pricing person to put a price on it. This book recommends doing the opposite, finding the price that customers are willing to pay and then designing the product around that. So some customers are willing to pay you $100. You're going to have $100 product, and now you try and find out the price, the product people want in order to hit that price.
Ah, that's really different perspective.
Yeah, yeah, it's a really great book. Highly recommend.
It's great. I will link it in the notes below this episode. What's the most valuable lesson that you've learned about building a business?
Um, I would say I keep saying this, but I think it's so important is understanding customer value, getting out and talking to customers, understanding how they value, not being scared of asking questions about price. I'll tell you, like, even at the smallest businesses, it's hard to just get out and say, "What are you willing to pay?" And so we have what we call the Van Westernort questions. So, at what price would this be considered so cheap you'd question the quality? What price do you consider it a bargain? What price is this starting to get expensive, but you'd still get it? What price is it prohibitively expensive? And you can glean a lot from those four questions that's different than what do you want to pay? So I would say starting off with those questions when you're starting your business to understand willingness to pay.
I think those questions are a really helpful guide because, as you say, it's really difficult to just ask someone, how much are you willing to pay for this? So those are a
Yeah.
nice guideline.
Yeah, 100%.
And if people listening to today's podcast only took away one thing from everything that we've been talking about, what would you want them to go home with?
Yeah, I keep repeating this, but understanding customers. Understand your customers' values, and setting up. And I'm assuming there's a lot of small businesses and accountants who listen here. I would say consider a lot of them just have one price point, and that means you're capturing one point along the demand curve. Think about whether there's ways to create an offering where you're offering multiple price points. You'll probably capture that allows you to capture more points along the demand curve. Having something simple for those just getting started out, having something more complex for those who are looking for something more. I find, even accountants who are selling, many still do hourly. You can set up kind of different levels of what you provide.
Yeah, I think again, it's the idea of how do you package what you're providing. Even if it isn't a product, it's like accounting services. You can still say, oh, I have different packages that I offer according to your
100%.
needs, and you can even do that 3-tier level as well, so that you can be providing to different businesses at different stages.
Definitely.
Fantastic. Well, thank you so much for joining us today, Tony. Really appreciate you taking the time.
Absolutely. Thank you for having me. I've really enjoyed this season and listening to it, and thrilled to be working with you guys. So yeah,
Yeah,
it's
likewise.
it. Yeah.
So thanks, Tony, and thank you everyone who's been watching today. We'll see you next week.
Thanks for tuning in to the Beyond Insights podcast.
Please like and subscribe on whatever platform you're listening to right now.
And please share with any of your colleagues or friends or family members that you think might benefit from listening to this podcast.
That's all from us. Until next time, see you then.